Right, traders, welcome back to the channel. Here we have the S&P 500 on the 15-minute time frame. So this video we're going to be going over something very special, right? So I'm going to be breaking down a trade using order flow, specifically looking at the footprint chart. So how how can you use the footprint chart to your overall advantage, right? So again, here just to mark out, something I always mark out is that we have the red line over here, which represents the weekly opening. Now, when we have a bullish week like we have had so far we're bullish post FOMC. I often like to see price come and test prices below the weekly opening. In this case, just so people can be aware of this, we've had liquidity over here, Asian liquidity and general trendline liquidity over here. So notice how prices come and swept all of that. And now from here, we're going to be going over a very specific trade you could have taken on the lower time frame. So just to begin and start things off, right, what we have over here is we have a key supply level. Now this supply level left an inefficiency or a fair value gap drove price lower, and we had a reaction over here the next day as well. So we had again aggressive buyers step in and drive price all the way down, right? This was Tuesday's move, which again was very good. So now as we see prices coming to this level, right, I just want to draw people's attention to the way that I'm looking at the charts, right? So this supply level was held on Tuesday going into Wednesday. So this was FOMC, so Wednesday the 31st of July. If we just play price on the 5-minute time frame, right? Let's get rid of this. If we just play price on the 5-minute time frame, what we again see, we see in the morning UK times, this is a London session, we see how price fails to break anything, but now we've had a break just before the 8:30 a.m. right? The 8:30 a.m. officially broke through, giving us a clear shift in supply to demand, right? So we had a supply zone that was holding, and now we've broken the supply zone over here. So now if we head down to the 5-minute time frame again, what we're looking at is a key level over here. We're looking at a key level in the markets, right? So again, from here now, let's just play price on till we get to the New York, so we get to the 9:30 Eastern time, which is this candle over here, right? So 9:30 Eastern time, we see an aggressive sell candle back into the key level over here, right? So this is again a key level, and we're looking for a potential trade on this key level. And it's at this point that I introduce you to the idea of order flow. So let's now dive into the footprint chart and understand order flow. Okay, so here we have the same exact price, but here on ATAS, so this is a footprint chart, right? So again, we're going to be understanding the interaction here between buyers and sellers. It is the exact same price action, but when we zoom into these candles, what we notice is we get opened up to a new world of understanding the interaction between buyers and sellers. And this is exactly what we're going to be breaking down in a lot of detail, right? So again, let's bring people's attention to, so we had the very large bearish candle. So we're at a supply zone, we're at a key level, sorry, not a supply zone. We've had a supply to demand flip zone. So this candle over here, this red candle at 9:30 Eastern time, we began to open up the markets, right? So again, we see an aggressive sell candle, right? So if I bring people's attention to this overall candle over here, so this is the candle at 9:30 Eastern time, so that's 1:30 according to this time zone. So what we need to understand, if we just quickly go into a footprint chart, right? So we see a lot of numbers and we see a lot of, we see the candle again. So again, that red candle, if we just zoom price back, what we see is we see a red candle, right? It's still the same red candle, but we're just zooming in price. And what we're understanding is we're going to read this, right? We're going to read the order flow. So this footprint chart gives you a few very powerful indicators that a regular candlestick simply can't, a candlestick chart simply cannot, right? So when we're here in this particular video, right, what we're looking at is we're looking at the interaction between buyers and sellers, right? So again, there's two numbers, one on the left, one on the right. So I'm going to just zoom this in so people can understand, right? So this is the candle, this is the opening candle over here. You have numbers on the left and you have numbers on the right. So anything on the left is the bid price and anything on the right is the ask price. Okay, so I'll repeat that again, right? Pause the video and take note of this. Anything on the left side is the bid, anything on the right side is the ask. And so the market is essentially a big auction between two players, buyers and sellers. That's all it comes down to. Sorry. It is simply an auction between buyers and sellers. And our job is to understand who is aggressive and who is passive. And once we understand who is aggressive and who is passive, we are better able to validate our key levels and validate areas of supply and demand, or demand and supply, or the flips between the two, and vice versa. So from here now, let's analyze the candle, right? This is very interesting when you understand this, right? So What you need to understand is we're at a key level, so we've had a supply zone that's been broken, right? So this is now a demand zone. But let's validate this demand zone. So going into this demand zone, this opening candle, what we see over here is we see pretty aggressive selling. What I mean by aggressive selling is that you have more people hitting the bid than the ask, right? So yes, we had anything here that you see green represents as more participants hitting the ask than the bid, right? So that's aggressive buying. Whenever you see a red delta, this is the delta. The difference between the two is the delta. So when you have a green delta, that represents that more traders or more participants hitting the ask. Buyers are aggressive, right? Green for buying, nice and easy, red for selling. So what we need to understand is as we head into this zone, right, the last few transactions over here, what we see is we see a zero down here, which represents no participants hit the ask. All the participants hit the bid, and therefore we see aggressive selling coming into this level. So you don't want to be buying at the moment at this level because we see aggressive selling. So now if we continue on, and what we see is we can understand how price, again, this candle here at 9:40 Eastern time, what we see over here is we see something very interesting where yes, we're at a demand level, and let's understand what's going on, right? We see aggressive selling. And the reason we see aggressive selling at this key level is quite simply we're just reading the order flow, right? We're reading what the footprint chart tells us. When we understand this and we depict this, we have a 7 on the left-hand side, which is 7 market participants hitting the bid. Now, the bid represents aggressive selling. The ask represents aggressive buying. So the delta over here is pretty red, right? The red bars over here represent more market participants hitting the bid than the ask. And because of that, that tells us that sellers are being aggressive. But what did we establish from this zone over here? If we just zoom out and look at the candles, right? So we're at a demand level because we've, by definition, when we break a supply, it now becomes a flip zone, right? We call it a flip zone in supply and demand, or just simply a shift between supply and demand. That's all it is. So if we head down over here to the candles themselves, when we see aggressive selling, right? I can make separate videos on the footprint chart if you like, but when we see aggressive selling into a demand zone, what that's telling us is that we're seeing a lot of action. We're seeing a lot of aggressive buying, but they're not actually being rewarded. And you can see that over here. Once they've failed to drive price lower at this key level, again, key level is very important, you see the delta over here becoming more and more positive, right? And you understand that the volume of that delta profile is increasing as you go, as you ascend up the overall candle. Just again over here, as price leaves, what you have is you do have aggressive sellers towards the bottom. Aggressive sellers, eventually they become aggressive buyers. But the point I want to make to people is that when you're at a key level, a demand level, and you see aggressive selling that isn't being rewarded with lower prices, right? You see aggressive sellers, but you see higher prices, right? So what that tells you is that you have passive buyers who are sitting at this level, who are willing to buy, who are willing to exchange with those aggressive sellers, right? So what you want to understand is that you have aggressive selling that isn't being rewarded, which shows us how we want to be buyers in this market, right? So again, with that being said, once we've validated this level, and we can further validate it just by understanding the delta profile itself, right? So understand that we had a negative delta here coming in pretty aggressive. One other thing I want to mention to people is that we have a bunch of zeros over here. So we have a 0 here, we have a 0 here, we have a 0 here. So an unfinished auction is when you have a non-zero multiplier on either side, right? So 13 by 31, 59 again over here, 13 by 31. This is an unfinished auction. When you have zeros over here, this often tells us that that level will not be retested because the auction there between buyers and sellers is finished. Something else to keep in mind as well. So as we just move on in price, right, what we now see, again, let's analyze the delta footprint, right? So once prices aggressively sold in and failed, we see aggressive buyers come in simply by the delta, right? Again, let's read the order flow again over here. Now we see significantly green delta, green delta, green delta. Notice at the top of the candles here, green delta, right? Again, what we see over here is we see a bunch of zeros over here. We see a bunch of zeros over here. So when you have no market participants hitting the bid, and you have 22 market participants hitting the ask, 310 hitting the ask. This represents aggressive buyers have stepped in after the demand zone has been validated down here. And so with that, we're now going to be looking for buyers. So let's head over back now to the price action chart to see what we get. Now again here, this is the candle. So if we just continue to play price on, let's understand what the 1 minute chart was giving us, because this is a 1 minute entry, right? So again, if you remember from the footprint chart, right? If you remember from the footprint chart, this candle over here, this movement over here, we saw that sellers essentially tried to aggressively drive price lower over here, but they failed, right? They failed. And now from here, what we're using is we're using our simple SMC, if you like, or smart money concept price action, right? So again, what we're seeing over here is we're seeing shifts of market structure, right? So let's just understand this basic market structure. So we see a high, low, a high. Then we're seeing a break, pullback, break. And now from here, we're seeing the market breaking structure to the upside, right? So now we've seen price break with a body. So now what we've seen is we've seen a shift of structure confirming this, right? Confirming the fact that we should be looking for buys overall, right? So again, aggressive sellers have not been rewarded, so they've essentially failed. This validates the demand zone, and now we see a shift in the overall order flow. We see more aggressive buyers stepping in via the positive delta, positive delta, positive delta at the top of the candle, positive delta. So we're seeing that in the orders, right? So now from here, it's pretty simple the way I like to enter. Now I simply enter off an imbalance, a 5-minute imbalance or a 1-minute imbalance. Again, what is the order block? How do you identify the order block, right? So the order block is essentially this candle over here. What makes an order block? Well, it's the last candle before the fair value gap. So the fair value gap is here. I will place my order block at the vicinity or the edge of the order block itself. Stop loss, I personally like it at the wick below. Yes, you can have it here if you're aggressive. I personally would have it here. I just like to be a little bit safer with my stop losses. And again, the S&P 500, I believe this trade, I mean, you need to be out of your trades before FOMC. Primarily, that's the way I like to trade, right? But a 2.5 hour trade was achieved, again, using this 1-minute entry. So if you just play price on, again, we had the markets moving bullishly, right? So again, key level validates, very important. You have a key level, and then from here, your job is to use the order flow like we've done over here to assess and validate price.